Hello everyone, how's everyone doing? Hope everyone's having a good day. Today, we're gonna be doing a very raw video, so I'm gonna be very long, no edits. I just literally press record, and we're gonna be talking about today's price action. Um, Obviously Wednesday, 24th September 2025. No news, and the day before we had Powell's speech on economic outlook. So today was gonna be probably less volume than the previous day because of no news. But regardless, I took a trade today, and we're going to be reviewing that, and we're going to be talking, more in depth about the actual trade. But one thing that I do also want to go over is what happened, how price traded. So there's a very good case for both shorts and longs for whether price is gonna, move higher or lower. And I feel like you could have longed or shorted today, and you probably could have made some money. One more than the other, obviously because we closed lower. But let's get into the case for long, and it's very simple. The first thing that I do want to note is that we are at all-time highs, so that's something that is viable to look for that has happened, over the entire period of us being at all-time highs, is that we have moved into moves lower, uh, which are mitigations and order blocks, and we've also used wicks to move higher. So here we've used this wick to move higher. Here we moved into a volume imbalance. Obviously, we're moving into a down close candle. And then here we have kind of the same motion going on where we have this move lower. We've moved into it once today and we've retracted from it pretty significantly. But there's a very good chance that we might, push back lower and extend through it. Whenever price deems that it's time to start to reverse lower, then it will start to reverse lower because obviously um, we can't just move higher forever. So, and we've built up a lot of liquidity with this move higher already. The trend line traders, retail basically. Um, all of this, if we take off the wicks, this is all buyers. Buyers beneath this low, beneath this low, beneath this low, and so on. Until today, where we kind of had a shift in that, where we've had not two consecutive days where we've moved lower significantly. We've had this move lower here, but there's just this big wick here that was most of the move, and this move was really just to retrace into this fair value gap, and then from where we created new all-time highs. Here it's a bit different. That's because when we were going into today, I was expecting, okay, so yesterday moved lower. We were possibly rebalancing this gap, or we were negating the creation of a imbalance here. So this can work in both ways. This can be an immediate rebalance that can bring us higher, or it could be a negation of a BISI, which would obviously increase probability to go lower. And I feel like that was the case today, where we had the continuation lower. So one thing that I do want to point out on the hourly, just before we look at the 4 hour, is how it was on the hourly. So um, obviously considering this new day opening up, which was created on the open of Tuesday, 6 p.m. You see, price opened up, we accumulated for a bit until we got into midnight, where we started to really move higher, and that followed through into London. And obviously, this moved into this range. And let me just see really quickly, because I haven't looked at this. But yeah, it moved into premium from where it started to move lower. And basically, the trade that I took today, the thesis that it was, operating under, was the fact that we were at all-time highs. We were moving into this mitigation block after we had a drop lower yesterday. So I was expecting that maybe, retail who wants to see shorts moving into this move lower, and within yesterday's big dump lower, retail who wants to see shorts, I want to obviously fade those. I want to go against them. So I was expecting that we would go higher, but I was wrong. And, sometimes that happens. And, you just have to take that loss and move on with the lesson. Um, Anyway, yeah, we were saying price opened up, accumulated for everything, and then started to move higher into premium throughout London. And then, heading towards the after market open, which is 7 a.m. up until 9 a.m. where we had this big drop lower. We started to kind of die off lower. And what I was expecting, me personally, what would have lined up with my model to allow me to seek longs is that if we had took London sell side and maybe moved back into the new dog here, or sorry, new day opening gap. If we go on the 5 minute, it will be a little bit more clear. So it's 9:30 open. This is immediately what I saw. I saw price manipulating lower, taking London, and then from there I saw my model one long, which I took my long there, and obviously it lost. But what matters is that I operated under something that I was expecting, and something that I had, built a kind of conclusion towards beforehand. So it's good that I didn't rush into it, and it was something that was really executed within my edge, and it wasn't something outside of my edge. So I have a couple of notes here, and so actually I was talking to a friend about today, and we also came to the same conclusion that there was a pretty good case for both sides, for both longs and shorts. And oh yeah, for let's talk about shorts now. I just forgot about that. Basically, what it is that we are all-time highs, and what that also means is that we have lots of sell side to be taken, and that's what we're kind of doing here. Another thing is, um, as yesterday sold off and got really close to this low, and it started to shoot back higher, which where we go back into the idea of it manipulating into the premium of this range, and then distributing to finally take out this low here, because ICT says that lows that are approached, but then we trade away from them for no apparent reason, we usually come back and take those lows, or sorry, lows and the highs. So that was the case for shorts. It was, both was very possible. Both was very, very possible. We could have, obviously moved into the mitigation block and, kept retailing for a while, and then um, continued to move higher by taking the sell side and, moving into the small gap that we have here, and also this mini mitigation block that we have within this bigger mitigation block. That was very possible. And I operated my long under the influence of, we're going to reject off this low. But then obviously we didn't. Resulted in a loss, and what can we really do? Just move on. So I think I've covered everything for the cases for longs and shorts. Longs were at all-time highs, moving to mitigation block. We manipulated during 9:30, moved lower, but then we pushed through that. And for shorts were overextended, lots of sell side beneath the lows, and also we had this manipulation move into this gap, big gap here, also into premium of the range that went and purged this low that we got really close to on the previous day, but we weren't, quite able to really take it. So that was today's job, and both were, you know, I guess you could say. I mean, there's no really talk of percentages here of which is more likely, because nothing is certain. That's one thing that you have to know. Nothing is certain to happen. It's the game of which condition leads you to making a more probable conclusion. I feel like that's a very simplified way to put trading as a whole. But let's move into the actual trade. So I haven't made my model public. That's not because of any specific reason, but I'll draw a quick schematic right now. Basically, what I want to see is a fractal liquidity pool being taken, and then I have two models. First model is if we create a 5-minute short-term low, and then we run it, and then from there we get an inversion or a fair value gap entry, and then from there I can take that higher. The other scenario is where we failed to create a 5-minute resweep or a second stage manipulation, as I call it, and we have a gap here, a big gap, that was created off of the sweep of the fractal liquidity. And then from there, we form a breaker inside of that gap. So we have that low, high, then low, higher, high. Then I can take the inversion here, or I can take a fair value gap that forms, or if none of those are available to me, I'll wait for the move back into the breaker, and I'll take that long again. So, today, well, let's first talk about how I was wrong in the idea. Obviously, I wanted price to go higher. It didn't. It went lower. And, you know, sometimes we're just wrong. And, the concepts don't work and we just have to move on. It's whatever. And this is what my friend had to say. This is a good buddy of mine. Um, I'll leave his channel in the description if anyone wants to watch him. But he says that these concepts, if they don't work, it's whatever. It's just they don't work. They just need to work enough to make money. That could be one in three times or even one in four times. But as long as it repeats, you have something that you can use to get, RR. And that's why most traders have their systems between 30 and 60% win rate. You know, it's easy to say that these traders are just not good enough and these traders are lacking a refinement in their model. But the true answer and the harder answer to really swallow is that you're just not as likely to maintain a 80% win rate over a 6% win rate. And that's mainly because 60% and even less is just less work. It leaves less room for discretionary error, it leaves less room for emotions. And with lower win rate systems, it's a fact that you can just focus on executing your model without having to really, pick between the hairs and try to get the most certain trade. Because again, you're not going to be right always, and you have to have some humility within that, and you have to understand that you won't always be right, and you have to be okay with that. If you're not okay with that and you get emotional, then you're going to start to change things in your model. You're going to start to change how you reprice. You're going to start to want more education. You're going to start watching more videos. You're going to get more ideas, and whatever leads to what, you're going to be back in the same spot that you started in. You're going to be back, you know, first finding your model. You're going to be collecting data, and it's going to be a never-ending loop instead of sticking to one, being consistent, executing your edge, and just letting the math play out. As my, I guess you can say, watermark here says, there is no such thing as money, only execute your edge. If you're constantly worried about money, you're going to build eagerness. When you build eagerness, you bend your rules. You start to mold the price into looking in the way that you want it to look. And then from there, you start to take flawed trades. And then from there, you are obviously unprofitable. And that's for the idea. I want to say that me being wrong on where we wanted to move for today, I'm completely fine with that. I'm right more often than wrong, and it will pay me more than it will take money from me. That's all I care about. And this is only about my high time frame narrative. Now, one thing that I also want to talk about, I don't want this video to be too long, but when I was taking this trade, I just spoke about how my model is supposed to look like with a small schematic, and that brings me into the actual Model 1 long. The Model 1 long, I had a period of time where I was taking a bunch of losing trades, and I didn't know why. So what I did is I looked at a bunch of losing trades and I reviewed them. Obviously, this is why you want to journal. You want to have something to look back on as a reference. I looked back at these trades and I said to myself, you know, what's the most recurring flaw, or what's the most recurring, not flaw, sorry, the most recurring characteristic that we see within these trades. And the conclusion that I came down to was mainly that I was not seeing proper body sweeps. And what I mean by body sweeps, let's take off the wicks off of this canvas here, or off of this chart. When we take off the wicks, do we see any proper body sweep here? Is there any body swing low that's being taken that I have marked out as Model 1 long? The answer is no. What does that mean? This is a poor sweep. Do not take this sweep. I'm not saying this to you. I'm not saying this as a, new 100% confirmed ICT concept. I'm just saying this from my own data. This is from my losing trades, what I've, taken in. And let me just pull up a good example of a proper body sweep here. Notice how these bodies sweep these relatively equal bodies. And from there, we drop lower. This is a proper body sweep. Now in here, if you have the wicks on, technically, this does look like a liquid sweep. It sweeps a swing low. This is a swing low. And off the wicks, this is just a continuation lower. This is not a sweep. That is where the mistake came in. And you know what's crazy here is that when I first took the trade, I felt it in the back of my head. I felt it so clearly in the back of my head. Something was nagging at me that this sweep is not good. It was for a split second. It was for a split second when I was looking at the 5 minute while my position was playing out on the 1 minute. It hit me and I said, maybe this sweep isn't the best. But obviously, I got too excited. Um, I go too quickly. I'm too eager to trade. This is what we were talking about in the beginning. And I take, not so favorable sweeps, ones that I've already mentioned that, you should not be taking these other sweeps. And it's the worst thing about it is that it reinforces a sense of doubt in my ability to do this. It reinforces self-doubt, and it reinforces a hopelessness in this whole path. And the best thing to do when this arises, laugh it off. This has happened to countless traders. I know better. Next time, this is the most important part. Next time, I will do better. I will do better. Taking the trade just to take the trade is not worth taking a trade and realizing it does not align with what is right in front of your face. Only execute your edge. No, when this was happening, I was in the back of my head and I was like, oh, this sweep isn't good. And I kind of ignored it. And I said to myself, it's still a sweep, technically. And obviously, I paid the price. And price bit me. I had to sit through you know, a very challenging trade. You can imagine what how much mental equity this took up from me, how much stress, how much cortisol spike this being in this trade gave me. And this is something that I want to learn from, and this is specifically why I made this video. Also because I don't want to journal everything because I hate typing. So maybe this was a chance for me to re-upload a video because I haven't posted in maybe a month. So this was definitely a good thing. You know, we work to avoid this. And I really quickly before I end the video, I want to go back to yesterday and I want to show you a proper loss. I want to show you. Here. Here's a proper loss. Notice this swing low. Turn off the candle, the wick, sorry. There's that low. We run that low. We move higher. And we still drop lower. So obviously, even though it didn't work, this is a proper body sweep. And this is just for me. You probably won't get anything out of reading this, but yeah, it's a good lesson to be learned. I'm glad I went through it this way, and I'm grateful that I have an ability to even take trades. People wake up with no roofs on their head. People wake up scavenging for water and food, and I'm over here, getting emotional about losing a trade. So anyway, quick recap on what happened today. We opened at 9:30, we distributed lower, and then we continued that throughout using this newly opening gap. You see we whipped back into it and continued to drop lower, accumulated, manipulated, distributed, and now we are within this daily imbalance. Now on the weekly, we may be forming a immediate rebalance, and from here we will see if we want to reject this immediate rebalance or go lower and move into this gap here that we haven't touched. So thank you all for watching. Hope you all enjoyed this video. I'm gonna go enjoy the rest of my day now and be safe.